to the Inspire Wealth podcast with Prof M, where we dive into the world of real estate investing and wealth building strategies. I'm your host, Mallory Meehan. I'm a real estate professor, attorney, and seasoned investor here to guide you through the ins and outs of creating wealth through real estate. If you're looking to take your real estate knowledge to the next level, don't forget to subscribe to stay up to date with our latest episodes and offerings. Welcome back to another episode of Inspire Wealth. I am Prof M, and I am joined today by Adam the Brit. Adam, welcome to the show.
Mallory, pleased to be here. It's taken a little time to get together, but I'm glad we're finally doing it.
All good things are worth waiting for, right?
That's what they say, yeah.
That's what they say. Okay, so Adam, I know we talked a little bit before the show about your background, which is incredible, and you've definitely had a lot happening. And why don't you give us kind of the condensed version of where you started and where you are now, and then we're going to dive into some of the things you're working on now.
All right. Well, I guess I started in a small village in the UK, and I was really into punk rock. And unfortunately, my high school at the time was not so much into punk rock, and they asked me to leave in no uncertain terms when I was 17. So I kind of found myself in a situation where no education, no high school degree, and what next? So I started managing rock bands. It was a lot of fun, but unfortunately didn't make a lot of money. And then moved to France, to Paris, got involved in British films, and met my future wife to be there, Dutch woman. We moved to Australia, started trading street markets, buying foreclosed and auction job lots from companies that were in trouble. It was, in fact, the last recession that Australia went through. And then I have a visitor today.
I see that. Welcome.
Dylan. And then moved to the Netherlands. And, unfortunately, being an Englishman, we're not known for our language skills. And I'd already sort of lived in France for a couple of years without really speaking French. So I knew how difficult it was. So I was like, what am I going to do in Holland? I don't know if you've heard Dutch, but it's sort of a guttural version of German. Sounds like somebody's swallowing something. So I started trading street markets there. And a single stall on a street market in Amsterdam turned into about 35 markets a week. A wholesale business, importing from across the world, job lots and overruns, stock overruns, and retail as well. A couple of retail stores, and that formed two things. That formed, I guess, my sort of synopsis for later investing in real estate, because I really felt like I had an understanding of how predominantly an immigrant demographic shops. And it also made me realize that I kind of didn't want to do something that involved so much physical labor, because I was standing outside all the time. So I, luckily enough, had a friend who was in the semiconductor distribution business. And this is just before the year 2000 bug. And so I kind of realized there was an opportunity there to go out and find components that were hard to find on long lead times. And so that business turned into helping companies outsource production to Southeast Asia and China, and also turned into a worldwide semiconductor trading business with offices in Hong Kong, Amsterdam, and Houston. And that was also the vehicle that allowed me to move to the United States. Now, one of the things about being in a business like that was it was a brokerage type business, so it didn't really require any sort of investment in the business. And so, sorry, the cat is going to keep coming back for more. He's very lovable, but so I decided I bought a couple of buildings in the Netherlands to house my business, and then I bought the one behind it. So I kind of always really liked the idea of people paying rent to pay off a mortgage. So I bought my first 16-unit apartment building in Houston. And this was before I had a social security number, and I'd only been in the country like 6 months. Luckily, I had some money behind me, and a banker that was sort of willing to help, a local banker. And then that turned into about 150 doors. But unfortunately, the property manager that we had at the time decided that she was going to help herself to some of our rent. And she ended up spending 18 months in state penitentiary ultimately. But it kind of made me a wake-up call as to having, there must be a better way. You know, there was just so many problems, tenants, toilets, etc. So I decided to start looking at the triple net lease space. And that's when I went out and bought my first office retail building in a very nice part of Houston, Texas. And that turned into another building directly behind it, and then some additional development in that vein, office retail. Financial crisis hit in 2008, 2009. I was also building high-end spec homes at the time, and I couldn't sell these spec homes. I was bleeding a lot of money. They were all kind of complete, and I was pretty worried. But I had seen a article or a show or a segment on, I think it was Nightline, NBC Nightline, about this guy called Odell Barnes, who was called the foreclosure king of America. And at the time, he was buying about 6,000 or 7,000 homes and commercial buildings sight unseen across the United States from his porch with just a phone, no computer, no nothing. So tracked him down, met him up at an auction in Detroit. And at the time, Detroit was a real mess. It was also January. It was freezing cold. It was really depressing. We drove around, looked at a bunch of houses that had all kind of been burnt out, all these foreclosed homes. And we decided not to buy any houses there, but there was he had a list of 7 homes in Phoenix that he was able to sell us for $70,000. So we bought those 7 homes for $70,000, and then decided that we better go look at what we bought, and that then turned into about 1,000 houses and probably 1,000 condos over the course of maybe 6 or 7 years. You know, like everything, all good times come to an end. You've got to kind of know when to pivot into something else. Obviously, the real estate market improved significantly fairly quickly. So I kind of started going much heavier into triple net lease retail, and then triple net leased small bay industrial, both ground up development and repositioning existing assets as well. So that's kind of basically brings us up to where we are today. An interesting piece of all of that is that, I kind of, I say that I'm a lifestyle investor. I like to look for a sort of an ROE, return on effort, as much as an ROI. And I realized in my semiconductor days, having offices all around the world, that you had to be kind of good at micromanaging and trusting other people to manage your business. So to create the right kind of systems, etc. So I do all of that now with about 1.5 million square foot of space with no direct employees. So we just have everything subbed out to management and leasing that is not within my direct employ. So I don't have to deal with all those employees and all that drama.
All the HR issues.
Oh yes.
Well,
I think you got to know your skill set, right?
Absolutely.
And that's not my managing people.
Yeah. Well, Adam, I feel like you have touched on so many different aspects of investing and real estate. And so you first started out in investing in Houston, in the Houston market, once you got into the US. Now,
Correct,
do you still have property in Houston?
I do, yeah. So, I'm a big believer in go where you know. You can apply that sort of generally to, if you're looking at an investment in something, if you can't explain it well to a sort of a 12-year-old, then you've probably got no business investing in that whatever it is, that business. And much like investing in a company, if you can't explain what they do, you probably shouldn't invest in real estate in a market that you don't know. I believe that local knowledge is key in any market. There are nuances, especially in residential real estate. One block difference can make all the difference between, something being desirable and something not. And as an out of towner, you just don't know those nuances. So, I really always advise people to sort of invest in areas that they know, and get to know, a number of markets and really become an expert in those markets before you pull the trigger and go buy something there.
Yeah, no, that's excellent advice. And that's exactly what I teach my students too, is that you need to understand what's happening in the local market before you get into it, because unfortunately the local market and the local government are going to have the most impacts on what you can and cannot do with the property. And, if there's any shifts or any sort of implications with zoning, that's all going to happen at the local level.
Yeah, absolutely.
So, okay, you invested in Houston. You also invested in Phoenix. Are
Correct.
there any other markets that you have kind of gotten to know that you have found to be really great markets here in the US?
So, I have a buy box right now. So my buy box is the basically Southern California coastal, is Phoenix, Vegas, Albuquerque, Dallas, San Antonio, and Houston. So I kind of believe, with the exception of Southern California, smaller metros, there's just too many things at play that make them, in my mind, more risky as a proposition. So, I like to invest, although I'm not a sports guy, I like to invest in cities that have an NFL team. That means they're kind of big enough to support my investment thesis. I don't like towns that have, a single industry that drives them. Because if that industry goes away, gets hit by tariffs, whatever it might be, AI kills it, then you're kind of screwed. You have all your eggs in one basket. So cities that have NFL teams typically have a diversified enough sort of commerce base to be somewhat insulated from any singular industry if that happens to soften. So, that's kind of my broad, sort of theory. I also believe that, it's very hard to become an expert in more than 4 or 5 markets, unless you really sort of have ADD or something. It's very difficult to know that many markets about that many markets really, really well.
Yeah, and I think that's where you find the local people who do know the market. And, to your point, you find trustworthy, reliable people who can point you in the right direction if you are looking to pivot. But I like that analysis. I like the fact that you look at cities that have NFL teams. I think that's a smart move because, to your point, they have to have some sort of economic, desire for an NFL team to want to
Right.
remain there, or, maybe even another professional sporting team. But yeah, no, I like that. It's as I drink my Steelers water, Pittsburgh is my market that I, grew up in. So it's one of the markets that I know. But I like the NFL market there. So I'm curious to hear about how your triple net leases have been going, especially, did you say you had office space as well?
So sorry, this tail keeps getting in the way. I did have office space. I currently don't have office space.
Probably for the best.
Yes, yes and no. So the buildings that I had when I kind of moved away from apartments were in one of the most desirable retail and going out areas of Houston, called Rice Village. And so you could literally walk out of these buildings and you had maybe 50 restaurants and coffee shops within a 10-minute walk. and also a whole bunch of retail shops to go visit. And so, real estate has to have in French they call it a raison d'être, a reason of being, right? It's like if you can have a space where it's conducive to entrepreneurs and their lifestyle, then those type of spaces and those kind of offices still do very well today. If you have some office that's out off a freeway somewhere in the middle of an industrial park and there's nothing around it, then people aren't so excited to go there. Also, the spaces that I had were smaller, more incubator spaces or small business spaces. And most oftentimes, entrepreneurs are looking for a space to get out of the house, escape the cats, escape the kids, maybe escape the wife or the husband, depending on their relationship, and to get some distance from their home. So, that sort of work-life kind of balance. But they still want to be able to, go somewhere nice for lunch, have people come and see them for lunch and say, we can just go walk from the office after our meeting and go, grab a bite or go for a drink after, happy hour or whatever. So I think if you've got space in those kind of areas, then you'll do pretty well. I think it's the sort of the space that's just really a commodity, that's, just another high-rise building and there's 10 of them down the road and there's nothing to distinguish it. Those are really the kind of buildings that I think are suffering the most. But, to that end, the opportunity, of course, is to identify buildings that do have that, raison d'être, that reason of being, that are undervalued and not the sort of flavor of the moment right now, and maybe pick them up for cheap. Because, at the end of the day, even though there is obviously a big shift to working at home and a huge shift in employment through, AI and robotics, there's still going to be a need for some type of office components and some type of meeting space where people can get together and brainstorm. It's just not the same online. I believe that, people definitely, there's just a different dynamic when you have a room full of people together, and it plays differently than if you're all on Zoom or on some type of other online meeting platform.
Yeah, no, I totally agree with that. I think that, and as humans, I feel like we crave that interaction as well, like that being in person with other humans and having that social impact. So I think that's a great point. I'm curious. So a lot of what you kind of identified were shifts in the market where, something had happened, you went through foreclosures, you bought, distressed properties. Are you still kind of in that game where you're looking into distressed properties? Because I know you said return on effort is a big one. So tell me more about like what your current strategy is as you are either expanding your portfolio or shifting how you're investing right now.
Right. Well, I think there's two things. So, I've written a book which is coming out next year, early next year, called Your Life GPS: Grind, Pivot, Succeed. Right. So, in my life and my experience, it's all about obviously grinding, but knowing when to pivot. And there are really, I think, a couple of reasons to pivot in life. The first is if you're doing something and it's not working as you wanted, or it's run its life cycle. And the second is, as we age, our objectives and our desires change. And, you need to recognize, ultimately where you want to be in life, hence set your life GPS. So what's the ultimate destination and how am I going to get there? And then question yourself along that journey, is what I'm doing today helping me achieve the ideal life that I want at the end, when I'm kind of older. And so it's kind of a continual evolution. So I, have realized that I would like to maybe simplify my life a little bit to a certain extent. So I am in the process currently of actually selling off some of my assets. And I'm looking to find maybe slightly higher quality assets that are maybe slightly less management intensive for a portion of what I'm doing. but because I can't help myself, because I like to add value, and I think it's a very overused term, value add, these days, because everybody's like value add this, value add that. But I do like the creative element of being able to see a building that's in distress and figure out, okay, well, if I change this, change that, reskin it with a new facade or whatever, and reposition it in the market, then I can raise rents by X amount and it's going to be worth a lot more money. So I like to create value in that way. And I'm also, I also like the idea of developing on a smaller scale. So for me, having a piece of dirt and then putting something on it, not that I'm overly concerned about leaving a legacy, but you're kind of leaving something behind that you created, and taking it from the sort of trees to a finished building where you've added something back to the community and people are running their businesses in it. It's kind of exciting and interesting. So I kind of have now three, as it were, buckets of real estate, sort of the more steady buy for cash flow, which is challenging right now, obviously, with the spreads on debt, etc., and cap rates that have really compressed. Then the value add piece, which is a lot more headache and a lot more work. And then the development piece. So, the larger pieces are going to be in the cash flow, sort of easier to manage. Know I'm going to sort of have enough money to pay the Whole Foods bill at the end of the month. But then also having a couple of buckets for sort of stuff that's slightly more speculative or more interesting. And then lastly, I think a lot of real estate people suffer from being very singular in their focus on investing. I certainly have been. I only really wanted to invest in things that I could manipulate sounds like a bad word, but change the value add, change, control. But I've also learned now that it's also a good idea to have another bucket. So I'm investing more heavily in private equity, public equities, and also in crypto, just to have sort of like I guess 4 legs on the chair. Hedge my bets. Obviously, nobody has a crystal ball. I don't know how real estate will be, impacted by AI. Obviously, there's a lot of trains of thought in inflation. If you look out, 5 or 10 years, and obviously, if you're looking to invest in real estate, you've got to look not only at the sort of going in cap rate or the going in price, but also, what's my exit strategy in 5 or 10 years when I, want to sell it, and do I think the cap rates and interest rates are going to be higher or lower in those, in 5 or 10 years? And I think there's so much noise out there right now, and there's so much development going on that I think it's very, very. I mean, I've always had a trouble polishing my crystal ball, but right now it's really, really cloudy. So I'm kind of I'm a little conscious of hedging my bets with other assets that aren't maybe correlated to real estate, and maybe act in different ways through inflation.
Yeah, I mean, it's exactly what's happening. We can't predict what the Fed is going to do, how interest rates are going to be impacted, what AI is going to change as far as the name of the game. You talked about, like 6 markets that you're currently in. Like, of those markets that you have investments in, have you found that any one of them has been maybe the one you lean more towards because it seems to be a little bit safer or has a little bit of a, less risk factor with it?
So I think really I think all the markets I'm in have their own, good bits and bad bits. I think, I'm much heavier in Texas, for the simple reason that I spent 18 years living in Texas, and I have a better relationship network in Texas. So I see more deal flow. I'm more confident making swings there than I might be in a market that I know less about, even though I still study it. I also have, like Houston has a lot more activity than Dallas does, for example, even though they're sort of comparatively the same size. There's just and then there's also the return metrics. Vegas and Phoenix have higher or lower, I guess, lower cap rates than Houston does. So it's easier to, and the debt cost is roughly the same. So you're going to make more money in Houston. Maybe the appreciation potential is slightly less there. It kind of depends. So there are just a lot of different drivers. We've also seen, because the majority of my investments are currently servicing a Hispanic demographic, we've definitely seen somewhat of an impact on that consumer base with the recent sort of ICE raids that have happened around the country. But these things tend to typically be not long-term problems. But I think as long as a town is growing and its fundamentals are, and the intrinsic fundamentals are strong, and the employment base is strong, and the city is somewhat business friendly, I think real estate investment should do reasonably well there over the long term. Obviously, if you kind of take snapshots, you can always argue, well, this is bad now, but long term, is it likely to continue? So so I wouldn't say any one particular location is outshining anywhere else.
Yeah, no, and I think you're probably spot on with saying that all markets have good things and bad things about them. You just have to know how to hedge your risks for some of those bad things.
Yeah, right.
I want to shift gears a little bit, Adam. I want to talk more about the book that you wrote. Can you give me kind of an overall synopsis on what your book is and kind of like what your plan is once the book comes out?
Sure. So the book's called Your Life GPS: Grind, Pivot, Succeed, and it's the entrepreneur's roadmap to an ideal life. And really, it's my business life story, from getting asked to leave high school at 17 to being sort of the first pivot moment during a strip search at a customs checkpoint whilst touring with a punk rock band, realizing that this may not be the kind of way I want to continue. Deciding on what I wanted my life to look like when I was still, young. And that for me was, I wanted to live overseas. I wanted to live somewhere warm, and I wanted to see the ocean. Those were and I wanted to be rich. And it wasn't any more defined than that. And then, so really how I designed my life to achieve that ultimate goal, and then the lessons that I've learned along the way. And it's really about pivoting, recognizing trends, be it, the internet, be it when it came along, be it Y2K, which wasn't a version of COVID. It was the Y2K bug, it was called. It wasn't a COVID variant. It was actually when all the computers were expected to reset and everything was going to fall out of the sky, which obviously didn't happen. The financial crisis, realizing that there's arbitrage in recognizing economic cycles in different parts of the world, because not all economic cycles are concurrent. Asia has its set of cycles, Europe, and as does America, and there's money to be made at all of those times. And it can often be hard to see that if you're in the middle of that downturn yourself, and you can't see the wood from the trees. So how to recognize those cycles, how not to be trapped by your zip code, how to kind of get out of your comfort zone and learn to be comfortable with being uncomfortable. And then ultimately, how to become an expert in something, not to be a jack of all trades, how to overcome being fearful, the imposter syndrome, how to learn to be a good investor, how to have the discipline, and then ultimately how to achieve your life goals. And then, on top of that, for me, the book really is about giving back. It's about helping people that are maybe struggling right now, either entrepreneurs that are running a business that's not really working. Hey, maybe it's time to pivot. Don't flog a dead horse, but don't give up too early, obviously. Also avoid the shiny object syndrome, so become a master in something. Even though I've had many different businesses along the way, I became a master in real estate. I've been doing that for a long, long time, even though I've had, different types of businesses related or unrelated to real estate. So always become an expert in something, because experts always trump or beat out people that are not experts. And then I'm really worried about the education system in this country, or not only in this country, but in most sort of developed countries in the world, that's really just churning out children to be employees, and they're teaching them methods and things that have sort of happened in the past. It's very rear mirror looking, as opposed to forward thinking. And I'm a big believer in, teach a man to fish and you feed him for life, as opposed to give him the fish. So I'm partnering with a organization, a nonprofit called build.org. And they have a program that goes into underprivileged high schools, and it's an elective program, and they offer an entrepreneurship course for children, and the children get to create a business, decide who's going to be the CEO, CFO, etc. Then they get to pitch that business in a Shark Tank like manner to members of the local business community, volunteers, and then they actually get to start a business, and it gives them the experience of starting a business. It sort of changes their reality as to what's possible. It builds confidence, and even if they don't go on and start a business in later life, it still helps them get into college, or maybe gives them a different mindset to help them grow in their future. So that really is kind of my main theme right now, is to have to help people realize that there's more out there than being a W-2 employee. And especially with AI, I think you're going to see a lot of people displaced in the coming years. And really, the only way I believe that people are going to sort of succeed in this world going forward is to own their own IP, be in control of their destiny, have a product or a name that does something that resonates with people, and control that, and not have anybody else, telling you what you can or can't do. And I think if you can teach people how to do that, then you're going to have a lot less trouble in the world going forward. Because I am definitely worried about how many people are going to survive, or going to be able to kind of find meaning in their life with, if AI really does do what some people say it could do.
Yeah, no, I completely agree. And I think it's a very noble effort of you and what you're doing with, the book and the information you're getting out there, donating all of the proceeds to that nonprofit. Awesome. I would be happy to share that. We'll put a link. What's the best way for people to reach out to you, Adam?
So the best way right now is through LinkedIn, Adam the Brit. If you reach out to me through LinkedIn, I post there regularly. And I'm going to be putting more content out as we go forward. I am on the other socials as well, but not overly active, but that may change. But right now, Adam the Brit on LinkedIn is the best way.
Awesome. Well, Adam, thank you so much for joining the show today. It was so great hearing about your story, and I'm really excited about your book that's coming out in February, and hopefully our listeners here can take advantage of that. Do you want to leave us with some last parting words?
I think in life, the biggest thing that holds people back, in my opinion, is fear of failure, maybe fear of success even. And fear is a very difficult thing to get comfortable with. Mm-hmm. But if you want to be successful in life, I believe you have to learn to be comfortable being uncomfortable. And if you are too comfortable, it probably means that you're not really growing, either spiritually or financially, or in any other way. So education, I think, is key. Always keep learning, and don't be afraid to try different things. Don't be afraid to reach out to people for help. A lot of people are very willing to help people that are trying to improve their lot, as it were. And it's, I guess, the old saying: if you fail, look at it as a lesson, and knock yourself or brush yourself off and try something different. Because you've got to. One of my favorite sayings is, you've got to go to know. If you don't try, then you'll never know, right? So, and every failure is a lesson that you learn from, to not make the same mistake in the next venture that you have.
Absolutely. Well, thank you again, Adam. And we will be sure to put your contact information on LinkedIn down at the bottom of the show notes. And for the rest of my audience, thanks for joining us on this episode. I am Prof M out. And for those who want a more hands-on learning experience, check out our online courses at inspirewealtheducation.com. Whether you're just starting out or looking to expand your investment portfolio, I've created step-by-step guides and resources to help you achieve your financial goals. So hit that subscribe button and let's start building your wealth one episode at a time.